PepsiCo is cutting prices by as much as 15% for key brands, including Lay's and Doritos, in a bid to lift sales by offering more affordable products. Let's get more on the company's latest results from Filippo Falorni, Director of U.S. Beverages Analyst with Citi Research. It's good to have you join us, sir. Thanks for taking the time.
Thanks for having me on, Lindsay.
So the big news, obviously, PepsiCo reducing some of its pricing, also right before Super Bowl Sunday. What do you make of that?
Yeah, no, absolutely. Look, this was definitely a concern from investors. It's been like a concern from a volume standpoint, the growth in the Frito-Lay business. That's because if you remember from the period of 2021 to 2024, US CPI was extremely elevated, and companies across the food and beverage space took significant pricing in that period of time in the double-digit range for a couple of years. So the volumes really got some impact in that period. And now with, given there's not really a lot of incremental pricing, you're seeing a situation where volumes have been negative for the last year. So companies are trying to stimulate volumes now with price reduction. So look, it's definitely a step in the right direction, I would say, in terms of like trying to reaccelerate the volume growth. We have to see the elasticity or the benefit on volume in response to these price increases. But the company sounded very confident on the earnings call, talking about already positive sign with some retailer where they tested this strategy, and also incremental shelf space gains with some key retailers in the US.
Yeah, I mean, confident as well by increasing the dividend as well by about 5%. So that obviously shows confidence in a company, I would assume. But like any company can only lower their prices so much, right?
Yeah, absolutely. I mean, look, there's going to be a limit on how much these interventions are going to be and how prolonged they are. On the call, the CEO, Ramon Laguarta, mentioned that these price interventions are going to be surgical. That's the word that they use. And so they're going to look at like price pack. They're going to look at certain retailers. They're going to look at certain geographies where consumers are feeling more the pressure of high inflation over the last couple of years. And so they're going to be, and not across the board, right? So they're going to try to really stimulate the volume on a brand by brand basis, on a channel by channel basis, and even on a pack by pack basis. So again, we have to see like how prolonged these price intervention are. But the interesting thing is that they're combining that with also with innovation, right? So they are reformulating part of their portfolio to remove artificial coloring, like the Naked line on the Lay's and Cheetos and Tostitos line. And so it's a combination of innovation, price intervention, and so they are hoping to get volumes back to growth in the snacking business.
And how quickly do you expect to see results from that was going to be my next question. In the next quarter?
Yeah, so they're hoping to get some positive results in the next quarter, so in Q1 26, but really it starts to kicking in even more into Q2, because remember, a lot of retailers, they do their shelf space reset around March, April timeframe. So really you'll see some impact towards the back half of Q1 and then even more into Q2 of 26.
Okay, so let's talk a little bit more about Elliot Management investment as well. They took out a $4 billion stake in the company last year. Part of this whole price reduction is something Elliot Management pushed. What do you make of the stake that the investment company took out, and how they're kind of moving things around on the inside?
Yeah, look, some of the strategic initiatives that Pepsi announced, they've been in collaboration with Elliot. In early December, Pepsi and Elliot issue a joint statement where they essentially said a lot of the strategic initiatives, including the price reduction, including the innovation, have been discussed by company's management with Elliot involvement as well. So clearly this is being in coordination. Look, I think clearly Elliot pushed Pepsi to act quicker because one thing that they've mentioned a lot also in recent earnings call is that they feel a bigger sense of urgency to really turn around the Frito-Lay business, which has been really the biggest underperformer if you look at the Pepsi portfolio, because their beverage business in the US has been growing in kind of the low single digit range. And the international business for Pepsi, which is 40% of the company, is growing in the mid single digit range. So the weak spot has been the Frito-Lay snacking business. And so Elliot definitely pushed Pepsi management to act quicker and with a greater sense of urgency to fix the part of the business.
Why is that though? I wonder what some of the challenges and headwinds are for the company. I know there's a lot of conversation with companies like Pepsi that the whole weight loss drug sector is kind of affecting companies like this.
Correct. So there's different reasons, right? So pricing is definitely one that they're trying to address because, again, as I mentioned before, from 2021 to 2024, companies took significant price increases in salty snacks to the range of high single to low double digit every year. And so one of their argument is those price gap and the value equation to the consumer wasn't there anymore. And so they need to address with affordability, and that's one of the part. The second part, as you mentioned, is definitely some more structural concern for the category, including the increased adoption of GLP-1 drugs. So on that part, they're working more on product reformulation, including increased protein in some of their snacking options. So they're going to launch Doritos with protein. That's one of their initiatives. And then the last headwind that has been there significantly is it's kind of like this whole broader health and wellness trend and consumers in the US being more conscious about what they're eating, reading the labels. And that's part of the strategy has been the reformulation on removing artificial sweetener, artificial coloring in some of the food products. And that is already in the market with the Naked line that they launched recently.
So interesting. Okay, we'll have to leave it there. Filippo Falorni, U.S. beverages analyst at Citi Research. Appreciate your time today. Thanks so much.